Hi there, Serial Trader here. Let's do an update on the major US indices. Now looking at the SPX daily chart here, as far as the wave count goes, I was actually looking for a top last week and then for a decline to start here in this proposed wave C of perhaps a larger wave 2. But that's just not quite how it played out. Now we're still sitting right in this kind of resistance area, a little bit above the 786 retracement of this initial A wave down as it's labeled here. But I'm seriously starting to doubt any downside potential here, even though the setup was looking so good. Now, if I go to the hourly chart, you can still see kind of the reasoning behind that expectation. We had the 5 waves down from the June high into our June 15th low. We had what eventually became a very complex, time-consuming kind of ABC 3-wave rally up, or so it appeared. And that was looking like a pretty attractive short entry. Now last week I put on some ES futures shorts. I've already been stopped out of those. And I actually put on that put debit spread I was talking about. Now I haven't closed that yet, but I'll probably close it first thing tomorrow unless this thing just starts absolutely dumping before the open. That would be the only thing that would stop me from closing it almost immediately at this point. Now what I'm basically seeing here, I mean, it's kind of complicated. This 5 waves down makes you want to see another 5 waves down to at least a lower low below that low. But it doesn't look like that's going to happen. So I'm thinking, well, what else could be going on? And I actually looked over here at the Dow Jones Industrial Average, since it has a somewhat different pattern than the S&P. And it looks like perhaps, at least you going by the Dow's price action, you can make the case for an A, B, C, D, E contracting triangle. Now, I don't know if this is going to be a contracting triangle for a wave 4 or what context this triangle will have. But it does look like a triangle nonetheless, which, as long as these lows hold here, it would suggest a move up to a high beyond the June high for the Dow. So if that's the case for the Dow, if this is indeed a valid contracting triangle and it's going to break out bullish here, and it certainly looks like it's trying to. It looks like we have a very strong bullish candle on Friday, almost a bullish engulfing, not quite, so we'll call that a very strong piercing candle on the Dow. So going off of that, looks like the market wants to go higher. So if I look over at the S&P again, how can you make this into a contracting triangle? So we got A, B, C, well, where's the D and the E, right? But then I'm thinking, well, maybe we can do something else. Maybe this is still the initial A down, 5 down for A. I'm debating where I'd want to put this B, either here or perhaps here. But A down, B up, and then possibly a truncated C wave down, okay? Now, you have to do a little stretching here to make this a 5-wave decline, and for C. And you see, if you put the initial wave 1, 2, let's call it 3, 4, 5, if you do that, it almost looks like it's valid, right? Almost. But then you let me just get rid of the line there. Then you encounter this little bit of overlap here. So let me just put the level where you would have overlap right here, 4-1 overlap. So what do you do with that? Well, it's possible you can have wave 1 end here, right at this level, and let me put the horizontal line there. So you can see it didn't actually quite overlap if that's where you put your wave 1. And then you would have to basically label this as some sort of strange ABC up expanded flat wave 2, where the C wave is out of proportion with the A and the B. But okay, maybe we just have to stretch it a little here to try and make this work. If the market is going to rally up, we have to find a way to account for that. So if this is indeed the right way to label this, where we got 5 down for A, 3 up for B, and then 5 down for C. So let me just, again, relabel. So we would do our, I guess that would be our 1, A, B, C, 2. Then we have our 3, 4, 5 for A. And then this would be a very unusual, but still valid A, B, C up for B. Again, this C wave would be so out of proportion with this initial A wave, but you can make it into a 3-wave rally like that. And then working this as a somewhat unusual truncated C, truncated meaning that didn't actually go below the low of the A wave where it normally would in a zigzag, and then you got 1, 2, 3, 4, 5 for C. So if this is the case, if this is the labeling we have to settle on, and let me get rid of this horizontal line, as I already explained how we're avoiding overlap by just having a different wave 1 low over here for C. So if this is the case, now it looks like if that's an important low, if that's the real C wave low of an ABC decline, looks like we have an initial impulse wave up, and looks like a 3-wave decline. So this is potentially a wave 1 up, this is a wave 2 down, and then we'd be looking for further development to the upside. And it's definitely, you can see from the top here, this is definitely a 3-wave decline, ABC down. Okay, so we've had a, let's just keep it real simple here without getting too wrapped up in the overall wave count, even though that's important. From this pivot down here that we'll, tentatively label as a truncated C wave here on SPX, from that level, you can get a clean 5 waves up for wave 1, clear 3-wave pullback in wave 2, and a very shallow pullback. I think it only did about a 38.2% retrace. Not even quite a 38.2% retrace. Look at that. So it wasn't even quite able to do a 38.2% retrace. And now we're going back and we've actually started making new relative highs from our high that we put in here at 3184.15. And that was as of Friday's close. We were just surging in the close there. So we got 5 waves up, 3 waves down, shallow pullback, so it didn't even make a 382 retracement. I mean, that looks actually pretty bullish when you look at it like this. So if that is the case, we're probably going a lot higher here. And we're about to break out of a, kind of a sideways consolidation zone that we've been in since, let's say, early June. So if that's all the case, we're going a lot higher, and, bullish is the trade to make here. Now I'm not quite convinced, although I'll be ready to pounce pretty soon here. But I mean, weighing all the evidence. So going back to the daily chart here, let's change the labels around here a bit. Let's get rid of that. So let's just call that A. Let's call this yeah, right there, B. Truncated C for 2. I mean, this is really stretching things. I mean, normally you get a completed correction, proper ABC down if it is a zigzag where C makes new low. But in this case, looks like this market just doesn't want to go down for whatever reason you want to pick. But yeah, I'm thinking, let's get rid of this channel. I'm thinking if we go much further here, and obviously if we get above the high here at 32.33, if we get above that June high, I think it's probably off to the races for another wave up, at least for a while. So that's my take now. Surprising how resilient this market has been. Like it's not allowed to go down anymore. Is that what's going on? I don't know. But even with the wave patterns, you can see there's almost a distortion. Like, okay, yeah, we still got a corrective wave. As we were looking to find a peak up here in June, if you remember back to those videos looking for that wave 5 top, expecting a pullback afterwards, we've definitely had some corrective action, but it just didn't play out as it would typically. I mean, again, doing the overall retracement of the entire 5-wave advance off the March lows, as you can see, we only did just marginally break the 23.6% retracement level, got nowhere near the 38.2% retracement level, and now we're already going back up in a new wave to the upside. I mean, that's just unusually bullish, especially given, if you want to call it the fundamental backdrop that things are in. But clearly fundamentals don't matter in this market. I mean, even the technicals are getting kind of bent here. So, all right. Well, that's basically my take. Somehow it looks like things are turning bullish again without even doing a proper, well, in my opinion, a proper pullback. And I think this contracting triangle interpretation on the Dow might be kind of the hint that we're about to explode up here. Because if this is a triangle and we're about to break out of it, you usually get an explosive move after you do a triangle. So if the Dow has an explosive move, I would expect the S&P would too. NASDAQ looks pretty extended, but so far that hasn't mattered, so I don't know what's going on there yet. But let's go, yeah, I think that's good for the wave charts for now. Let's go over the Thinkorswim candlestick chart, and you can see, I mean, we're respecting the daily T-line as support. We did a bullish candle there on Friday. Not quite a bullish engulfing. We didn't quite open low enough on SPX, but that's obviously kind of has the spirit of a bullish engulfing candle. Close right near the highs. We actually have a golden cross happening on the daily. So the 50-day simple moving averages, 50-day simple moving average is crossing over the 200-day simple moving average. So that's obviously a long-term bullish technical development, also known as the golden cross. What do we have on the weekly SPX candle? Weekly candle, absolutely nothing going on there. Just another bullish candle. Closed near the high of the week, well above the weekly T-line. You can see that 50-week simple moving average actually served up as some nice support. So that's interesting. So yeah, nothing bearish going on here on the weekly or the daily. So just pointing that out. Dow Jones Industrial Average. The Dow had a bullish candle on Friday. Not quite a bullish engulfing, but we'll just call it a very strong piercing candle. Closed above the daily T-line. And you can see the Dow likely in a contracting triangle about to break out is my best take currently. So things are looking bullish somehow. No need to fight it. I mean, I think early this coming week, I'm just going to go long some futures and just see where it wants to take things. Weekly on the Dow, not much there. Just kind of using the weekly T-line as support on the Dow. So fairly bullish looking there. Just quickly go back to the S&P there. Yeah. So I think next week, as long as things don't just absolutely tank on Monday there, I'll likely get into some long futures, and I'll put my stop just below this candle here, and I'll use the ES candle, so the levels will be slightly different. But on SPX, 3115.7, so that would be the stop on using SPX as kind of a mental guide, mental stop. Get out of the futures if SPX goes below 3115. But as it stands right now, I kind of doubt it will, and I think we're going higher here. So enter anywhere near current levels, stop just below 3115, and we're obviously looking to go well above the 3233 high there that we made in June. So that's kind of my bullish trade idea for the coming week. I've all but abandoned the bearish side, at least for now, unless something drastically changes. Looks like this market still wants to go higher, so I'm not going to fight that. Okay, I think we've now back to the NASDAQ composite, because we were just at the Dow. NASDAQ composite seems to make a new high almost every day. I guess as dangerously extended as it looks, who knows when it ends, and I'm not going to try and guess where it's going to end, but I'm also not going to get in when it looks so late to the party. I mean, I guess you could just get in and use the previous day's low as your stop, because it has been making literally a higher low and a higher high almost every day. So that's a very short-term kind of momentum following play you could do if you wanted to. Not my cup of tea, but certainly, I mean, if you look at this whole time, I mean, that was one candle where you might have been stopped out using that strategy, but every other candle for the last, I don't know, 1, 2, 3, 4, 5, 6, 7, 8, 9 to 10 days has been doing that. So just a thought, if you want to chase the top on the NASDAQ, that's a somewhat safer way of doing it. Previous day's low as your stop. You're only risking, a single candle not that bad. Okay, weekly on the NASDAQ composite, what to say? I mean, you just have a euphoric breakout. And in fact, we have a weekly gap up that's not even filled. So let's see, this previous candle, the week's high was 10,310. The week's low in the most recent week here was 10,337. So we literally have a weekly unfilled gap in an already overbought euphoric top. You would think that gap would get filled sooner than later, but I don't know. How high can this go before it starts breaking? Your guess is as good as mine at this point. Okay, that's the NASDAQ. Runaway train. I still think it's dangerously extended, but so far that hasn't mattered. And on the VIX, we had a bearish engulfing candle on Friday. So it looks like VIX wants to go lower. If VIX actually starts getting below and closing below the 200-day simple moving average, that's a pretty bullish development for stocks. If VIX really starts dying off there, that means stocks are going higher and likely in a more smooth trending fashion, not a choppy, volatile fashion, as a high VIX would have you think. So VIX says market wants to go higher as of this candle. And if we go to the VIX VVIX tool, VVIX is below the red moving average. SPX is once again back above the blue moving average. So it's in a bullish trend right now, bullish mode. There is a divergence between VIX and VVIX. So you see VIX so far making a higher low and also making some higher highs relative to VVIX making lower lows and lower highs. But that doesn't matter that much, as VIX can just keep collapsing and make a lower low and erase this divergence. It only matters if this endurance holds, VVIX pops up above the red, SPX turns down below the blue, and then we actually have a sell signal, but that's just not the case right now. All right. Well, that's all I'm seeing currently. Things were looking like a potentially great short opportunity last weekend, but looks like that's kind of been extinguished and things want to go higher. So you don't have to trade this. You can just sit out and wait for something else to appear. But my best take is we've done some consolidation. Not the ideal pattern I was looking for, but some consolidation off that top in June. And it looks like we're threatening to break out now in another potential impulse wave up. So play that as you will. Let's see what this week brings. Serial Trader signing off.